Hello and welcome to day 4 of the 7-day money challenge. For those of you that have not watched and done the exercises on day 1, day 2, day 3, please stop this video and go and do the 3 days in the right sequence in order for you to get the benefit of this 7-day challenge. For those of you that have done the work up until now, well done, pat on the back for turning up on day 4. And this today is all about looking at more practical aspects of looking at the expenses that you've got and the income that you've got. And there's some tips and tools that I'm going to share with you and an exercise that I want you to actually do in order for you to actually keep building those walls in this imaginary house, which is the relationship that you have with money. So now we're in the process of building full wall number 2 and the next 1/3 of the 4th wall. And this is all about the exercise that you did on day 2, where you noted down on a piece of paper or in a notebook all the expenses that you incur on a daily, weekly, monthly, annual, yearly basis, and then you offset the income that you actually earn in the year. And when you do the simple arithmetic of income minus expenses, the net position is going to be one of 3 outcomes. The ideal outcome is that your income exceeds the expenses that you're incurring, so you've got some excess cash in your bank account or in your pocket if you still operating actual analog cash rather than it all being digital electronic. The second is where your income and your expenses cancel each other out, so you've got left 0 in the bank. And then the third is where you owe money, that you in a deficit, in a shortfall, that you've not been able to pay all your bills, whether you've got an overdraft or because you've not been able to cover some of the bills that month or across the year, as the case may be. But no matter where you fall in these 3 kind of categories, you probably, as a result of watching these videos, want to improve your relationship with money. So if you've got excess cash, you want to have even more excess cash. If you've got 0, you want to start making it an excess cash position. And if you're in that third category where you're in a deficit shortfall, you will probably most importantly want to get it to at least as nil, as 0, that at least you're covering all your expenses and you don't owe any money. But in an ideal world, you would want that to not just be in a nil, you want it to be in an excess. And in order for us to be able to get you into that from a kind of deficit position into an excess position, there is, as part of the day 2 exercise, what I asked you to do was also document which day of the month these expenses are incurring, and if they are an annual or if it is a monthly, because here in the UK we've got the ability to automate stuff through direct debits or standing orders, and that way it can be automatically deducted from your bank account, provided obviously there is sufficient funds in your bank account to do so. But as part of that list, there's probably a lot of information captured that is probably discretionary spend. And by that, what I mean is, if you want to remain living in a home and you want to have transportation, then you probably are prioritizing what bills you're actually paying. So it's probably more important to have a roof over your head and have a car or a vehicle to be able to get to and from work or whatever you may be doing to earn cash. And in terms of your expenses that are which are discretionary, which you could decide to stop and it still keeps a roof over your head and it still keeps a vehicle operating, is potentially subscriptions. So if you've got Amazon Prime, if you've got Netflix, if you've got a TV package through Virgin, Sky, whatever it may be, you may be paying for apps that are for your wellness, for like education, whatever it may be. But those are things, or like like if you like going out for a coffee or a meal or doing some activity, going to the pictures or going to the theatre, whatever it may be, those kind of items of spend are discretionary, as well as spending on clothes and food, because food you can actually choose to either buy cheaper brands or you could buy from a different supermarket or retailer, and you can maybe, if you've got a garden, you can maybe even start I'm thinking cooking, but it's not cooking, it's about planting and growing your own fruit and vegetable, depending on the climate and where you're actually located. That might be a possibility for you. What I'm trying to basically say is that as that exercise on day 2, where you wrote down all your expenses, what day of the month those expenses are going out, or when in the year they're going out, you should be able to identify which items are a non-negotiable. That if you've got a mortgage, you probably negotiated your mortgage interest rate on either fixed 10 or a variable kind of rate, and there will be a time frame in which you can actually revisit that, but it's not something that you can actually go and change tomorrow, unless tomorrow is when it's due to be renewed. But when it comes to subscriptions, if you've got Amazon Prime and if you've got Sky TV, you could decide to go to a lower package, or you could decide to stop the subscription. There are choices that you can actually make. And the exercise that you did yesterday on day 3, which was looking at what does money mean to you? Why do you spend money, and why do you want money? So that should be giving you your kind of core reasoning and your strong why as to why you want the money. So then revisiting the exercise from day 2 with the overlay of day 3, it should make it easier for the 2 options that you've got. If you're in a position where the excess cash that you've got is not what you want more, where you're in that zero, your income and your expenses cancel each other out and you want to have excess money, or where you're in that deficit and you actually owe money and you want to clear the slate and then you want to be in an excess position. The only 2 options that you've got is that you either reduce the spend or you increase your income. Now, the reduce the spend is taking the exercise from day 2 and then looking at the things that are discretionary income that you can make the decision for you. And this is where your day 3, your why, will be bespoke to you. If for you social interaction is important, cutting out going out for coffee once a week to socialise with your friends, that might be a non-negotiable. That isn't a discretionary spend. It's something that you need to do for your own mental and emotional well-being. So that is something, I'm not debating that it's about cutting out everything. You need to figure out what in your list of expenses you could reduce or cut out, if that is the case, to give you extra cash, if that is what you're actually wanting and aspiring for. But then there's other types of expenses, such as insurance and loans and things that you can compare different providers and you could get something that is of a comparable benefits and offering, but at a reduced rate. So this is where you need to start thinking, when is my kind of home insurance, or when is my health insurance, or when is my car insurance due for renewal, and then start looking at the kind of comparison sites so you can actually reduce the cost impact in those situations, if you like, because I'm not saying forgo those kind of items, but it is about making the kind of choices so at least you're getting value for money and you've got extra cash in your pocket rather than in the insurance providers. And then the other, so this is where it's the stop wasting money, where if you've got like 5 app subscriptions and you could actually condense it down to 1. So for instance, you've got Amazon Fire Stick Prime, so because you're watching all the kind of content from Amazon. You've got Netflix, you've also got Virgin Media or whatever it may be, and you might have a couple of other apps on your phone or on your iPad or on your laptop, and you don't need to have 5. You could actually condense it down to 1 or 2, and then you can actually make better use of the actual subscriptions that you're actually willing to pay for. Because there's a lot of times people will take out subscriptions and they'll keep paying it each month, but in actual fact, when you look at the actual usage, are you can you be on Virgin Media, Netflix, Amazon Prime all at the same time and listening to Spotify or Apple Play or whatever it may be? The chances are no. So from that kind of perspective, it's about getting that kind of right balance. So then the other thing is, so reducing expenditure is one side of things. The other is that you can increase your income. And the increase the income, there's multiple kind of aspects to it. So depending on what you do to earn money, whether you are employed by an employer, are you on a contract that doesn't have overtime as an availability, in which case then you may ask to have some overtime if you wanted to incur more income. Or it could be that on your holidays that you've actually got, rather than going away for holiday, you may decide to do extra work and sell some of your holidays and get more income that way. I'm just throwing some ideas. You will know the specifics that apply to you. Others is taking on a second job, and that is doing food deliveries, home deliveries, assisting people with their food shopping. I think DoorDash is one that got mentioned in a video earlier on this week that I watched on YouTube. So there's multiple kind of things that you could do. If you've got a passion, something that you've got a lot of knowledge and expertise in, you could actually create courses that you can actually share that knowledge and experience with people. You could even have a YouTube channel, provided your niche is such that you actually get 1,000 subscribers, 4,000 watch hours, then you could actually be monetized through YouTube, through their AdSense. So there are possibilities and opportunities, and this is where your creativity and resourcefulness can come in if what you want to do is increase your kind of income. The other thing is about, like now, there at this moment in time, so we're in September, it'll be October when you're seeing this, October 2024, interest rates, even in bank accounts, if you've got your money sitting in a current account, the reality is it's probably earning very little, if any, interest whatsoever. Each banking provider will have different kind of interest rates, but there will also have savings account, and in some instances it can be instant savings account, and you could have cash that you're maybe not going to use throughout the month, but it could be earning you even just a few pounds of interest. Better in your pocket or in your bank account rather than in the banks. So there's things that you can actually explore and do that potentially, from an income perspective, you can negotiate a higher salary, potentially, get a second job, do some overtime, start a side hustle, gain more skills, so then you can change your job, pivot your job, so you can earn more money that way. So there are opportunities within the increase. Where there's a will, there's a way. If you're willing to change your relationship with money, and if money and having more money is important to you, then the creativity and resourcefulness will come in, and it'll enable you to find that. I was wanting to sort of touch on a couple of things about debt, because if you are in the situation where you're in a deficit, then you obviously owe money. And owing that money, say for instance, you've not paid your gas or your electric bill or your broadband, you will owe those utility companies money, and then they will be charging you interest for the money that you still owe them. And some people will react that they'll go and they'll get a loan, and because maybe their credit record isn't great, they will actually get a payday loan, which the interest rates tend to be extremely high. And then on the flip side, it would have been cheaper for them to just pay the interest from the utility provider. So when it comes to debt, there is good debt where it's either 0%, and if you've got a decent credit score record, then you probably could find credit cards that offer you a 0% interest over 12 months, in some instances longer. And then, or you've got mortgages or a loan probably taken out like 2 years ago, probably from this point in time, because interest rates have increased. So now loans don't tend to be in the kind of 1 or 2% range. They tend to be much higher than that. So, but if you could have a loan that was in the 1 to 2%, I would still classify that as good debt to have, because if you could have money sitting in a bank account that's earning 4 to 5% in interest versus you paying out 1 to 2%, then you're actually making money. But I'm not wanting to overcomplicate this about how to make money through kind of debt and interest rates, but there is some good elements of debt. Where the debt is bad is where the interest rate is 4, 5 and above. And a lot of credit cards, payday loans tend to have anything from like 20 up to maybe 30, 40, in some instances even 50+%, in which case this is where a lot of people that are in that kind of vicious circle of spending too much, not having enough income coming in and being in that deficit position, that then it can actually take years, and potentially you might even need to go into bankruptcy to clear off the debt that you amass. So from that kind of perspective, it's to be very mindful with the actual spend that you're making. And that's why the exercises on day 2, what is my expenses, what is my income, day 3 about understanding what is the meaning of money and why you spend money, and then doing the kind of review. So today's kind of task is looking at those expenses, what is discretionary and you could stop, what could you actually reduce, and then also exploring, could I increase my income, is there a possibility within that space, and considering debt. If you have got payments that you're actually making and you're paying interest, but there is a possibility for you to get a credit card on 0% that would cut down the interest, and it would make you pay that balance that you may have quicker, that is things for you to explore. And what it would be kind of important for you to also do is that if you've got a big expense that's coming up, such as you want to replace your car, you want a new laptop or a new phone or something, which is a spend that is greater than £500, it is about starting to explore what is the kind of more financial wise way for you to incur that spend, but not spend as much as you could if you put it on a credit card and you were paying 20-30% interest because you weren't paying the balance straight away, or where they offer you higher purchase but their interest rate is 8 or 9%, where you, if you shopped around, you might be able to get something at 3 or 4%. Or negotiating, considering that you could actually negotiate, go and buy a car just after the new registration. In the UK we've got registrations on the 1st of March and on the 1st of September, but if you went on the 30th of March, you could actually negotiate to get an old registration vehicle because they want it off their forecourt. They don't want to be holding on to that stock. So you could negotiate a cheaper kind of price than what the retail price that they are selling it for. And the same with like mobile phones, laptops. Go and buy the kind of version before the latest version, and you probably find that a lot of suppliers, a lot of kind of shops or online retailers will be selling that stock at a cheaper, though a discounted kind of rate. So it's about being a wee bit savvy, and this is where I said I wanted you to get some tips and tools of things to do ahead of coming up to Christmas and the festive period in December. So this is probably the time when you're starting to think about buying things for loved ones, family, friends. And if you're going to be doing that, think carefully about what you're spending your money and how you're spending your money, to make sure that you're not getting yourself into that high debt position, or you're not using up all the excess cash that you've created that could be earning you even more financial freedom if that is what you're choosing and aspiring for. So think ahead. What is the kind of spend that's coming up? How could you spread that or incur that in the most kind of efficient way, where you keep more of the cash yourself rather than giving it to a retailer? A retailer. And looking at what expenses have you got that you could potentially either remove, eliminate, or reduce, because you're doing the kind of comparison, and maybe starting to think, oh, I could actually start a side hustle. There's a lot of content on YouTube that could actually guide you in ideas of what you can actually do. Okay, I'm going to bring it to a close for day 4. Thank you for watching. Now, seize the day, go and do this exercise, look at the day 2, look at the day 3, and come up with what could you reduce, what could you increase from an income perspective. Feel free to add anything in the comments below, and you're choosing wisely. I'm just saying that you're choosing wisely for doing this work, and in 7 days your relationship with money will have shifted. So until tomorrow, bye.